All right, guys. So we have a lot to unravel in regards to the Bitcoin chart. We're gonna talk about Zen, new all-time lows that have actually been set. So stick around to the end of the video. You don't want to miss this information because I give you the actual narrative that's going to be driving this particular market. So let's go ahead and get started into the charts, guys. We can see Bitcoin trading roughly again around $25,769. Now, what I'm focusing on for this particular weekly candle closure, which is going to be closing about in 7 hours and 1 minute, as you can see on the right hand side right here, is the actual EMAs. So the 21 EMA and the 55 EMA crossings. Now, this actually won't occur until we're trading below 17,372, as you can see from this info box panel that I am getting from this indicator that's free on TradingView if you actually want to get it. It is a very useful tool overall because it gives you indication of the trend for the market. Now, again, keep in mind the moving averages are lagging indicators, so the move can actually happen before the crossing. So you have to keep that into consideration when applying it for your strategy. But with that being said, so far, as long as we're continuing to close these candles below the 55 and 21 EMA on the weekly, this is very, very bearish overall for the market. Now, with that being said, where will I actually get very bullish, turn on or put on my bullish hat on, is when we can get above this particular mid region of this whole structure right here, guys, which is sitting around 27,700 area. So if we can actually close above, again, these 21 EMAs and 55 EMA and this particular mid region of that, which is coming around that area, then I would put on my bullish hat back on. But until we continue to close these candle closure below that, the bears do have full control of this particular market, guys. That's all I'm gonna say in regards to that. So with that being said, I want to move you on to the 3-day because the 3-day is very important here. As you can see, we are very close to seeing an actual cross on the 3-day occur. Now, when you see a cross occur on the higher time frame like the 3-day, there's a big substantial move coming to the downside, guys, in this case. So we can see the 21 EMA cross below the 55 EMA will occur around the $23,800 area. Now, this is a key pivotal role that we've been actually discussing in our previous videos. We said anything, below $22,000 to $23,000, guys, is really bearish long-term for Bitcoin. And when I say long-term bearish for Bitcoin, that means we have an opportunity to actually test the lows of this particular cycle, the all-time lows for this particular cycle, guys, the bottom around November of 2022, which is sitting around, again, $15,000 to $16,000 area. So there is still opportunity where the bears do have an opportunity to close in and apply pressure way below $23,000, guys. Now, what have I thought? If we were trading roughly around $30,000 area, that you would say to me, we have another opportunity to retest the lows for Bitcoin, I would have said, you know what, you're maybe crazy here, because the probabilities of that actually happening during that time would have been unlikely. But the scenario, the probabilities actually went a lot higher, knowing that this week we're going to see what the Fed is actually going to do based off of the inflation data that's going to be coming out this week, right? The CPI data. So that's something to actually keep in mind this week that will basically provide more context for the next quarter, guys. Can Bitcoin really reach $100,000 to $200,000 in the future? Absolutely. But until, the spot ETF happens where these big institutional money can actually come in, which you can oddly say that, hey, maybe there is already institutional money flowing constantly into this market. However, something big as a spot ETF could basically bring Bitcoin, to $100,000 to $200,000. But my thesis here is that we want to go back to and look at is that we get above 27,700, bullish hat back on. Anything below that, bears do have full control of this particular market. We move on to the DXY real quick, guys. We can see the DXY is continuing to essentially grind upwards and onwards. We currently, we're sitting around 105.23 area. So, the DXY dominance is still there overall. Now, what we're setting up in regards to the DXY is that more likely, as you can see on the shorter time frames, we're actually putting in these higher low, which is very healthy for the DXY. Now, the most likely target area, to put in that next higher low would be just roughly around the 104. Now, losing that 104 could jeopardize this particular structure for the DXY, which would spell very good for Bitcoin, maybe getting above that particular mid region that we've been discussing around $27,000 area, guys. Okay, which I would probably just move a little bit down like that. So again, getting above this mid region, very important, and that could actually happen if we break below the 104 area and then come back down maybe to 102, seeing what happens, the correlation between them there, and then we can actually reassess it from here. Now, if we actually take your fib extrapolation point from this, swing region to the downside, and then, take it from all the way to the top side of this particular structure, where your next support actually comes in is around the 104.2 to 103.8, guys. So again, losing these particular areas, this higher low structure right here, could jeopardize this particular movement, the strength that has been happening for the DXY, knowing that you actually just took off this lower high from this previous lower high, guys. So you can see downside pressure movement, you broke away from this one, and your next likely resistance comes in at the 105.89 area, guys. If the DXY breaks above that and this momentum actually continues, puts in the higher low, breaks above that particular resistance, Bitcoin is going to lose this support structure that it's been trying to hold, for quite some time, coming back all the way since May of 2023, guys, okay? So very important targets to actually look at and assess from there. Now, let's go ahead and move on to Zen. So we'll talk about our strategy because I wanted to actually update you in regards to the strategy 21 with this one. So the strategy 21 actually played perfectly well. It did not meet the actual average that we needed to see for it, but we were supposed to actually take profits, guys. So I'm going to show you the statistical data here. So again, you're supposed to be taking profit right around when PMARP gets above 78. So that's when you're supposed to be taking profits. So we can see that from this area, going up about 2.93%, that we actually went above 78 percentile on the PMARP, guys. So keep an eye on this number right here. So once I hover right here where we should have took profits, it actually came to 85.4, guys. Okay, so this area, so this actually played very well. So it brought you about 2.93%. It didn't actually bring you the average of this, this data set. The average usually for upside brings you about 4.66%. But on this occasion, it actually brought you 2.93%. So you can actually add this into your strategy and your data set for future occurrences, guys. Again, I give you all these strategies for free, guys. And I'm not here basically to enroll you in any course. And the only thing I ask is that you give this video a thumbs up and you consider subscribing to this channel, because I do give you free content that you can maximize and even hedge your long-term portfolio for the long term, guys. So again, this strategy played very well. Again, continuing to consolidate just roughly around that support structure of $25,600, guys. Let's go ahead and move on to Zen real quick, guys. Well, what do you know with Zen, guys? What do you know with Zen? What we do know is the 55 EMA constantly playing heavy resistance, guys. As long as we continue to close below the 55 EMA, nothing changed, guys. You can see constant 55 EMA rejection, constant 55 EMA rejection, constant 55 EMA rejection, guys. Rejection after rejection after rejection. As long as we're continuing to close below that 55 EMA, I don't see why Zen cannot continue to put new all-time lows for this asset, right? It's just what it is, guys. We can even see right here, we put new all-time lows, guys. We put new all-time lows based off of the strategy, based off of the delta range indicator that we've been discussing. So far, this has actually brought you about 25%. Still has not seen the maximum average, or sorry, the maximum or the mean average, which is around 28%. Okay, we still have not seen that, but so far, very profitable short trade, guys. Very profitable short trade based off of the conditions being met right here. Brought you about 25.88%, guys. Okay, how do you take this particular strategy? Once you get a closure, a hike in the sheet candle closure above this particular yellow line here, followed by low volatility levels, that's when you take a short side position in regards to this particular asset. And the mean average usually brings you about 28%. The maximum brings you about 42%. But with that being said, 42%, where does that actually put you guys? Well, that actually puts you roughly around 430 area, guys, okay, on Zen. Okay, so that's where you're looking in terms of the targets if the maximum move of this were actually to be met. But for now, so far, we've seen around 25 to 26%. So let's actually go ahead and talk about what we're seeing here. So again, we broke below the previous all-time lows for Zen. What was once support is now acting as resistance. As you can see here, guys, support, 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 support. Okay, now what happened here, guys? Let's take a look and zoom in and see what actually happened. So as you can see here, you know, we tried closing above the 55 EMA, rejection, coming at key critical area of what was once support, rejection, guys. Okay, it does not get any easier than that. What was once support is now resistance. So as you can see, heavy resistance. And the most likely scenario, taking our fib extrapolation point, okay, from that particular swing, as you can see, there is no more support structure for Zen. So what is the tool that you're actually going to use for this? Is you're going to use your Fibonacci retracement tool. So we're going to take from that swing right here, guys, to this swing right here, swing low to swing high, from that big move on the higher time frame, right? Where does that put your next support structure? Well, it puts you right around the 236 area, which is putting you around 377 area, which is also meaning the average, close to the average of roughly around 470, I would say. So you're really getting close where the fib are, where your next support structure is in regards to that, guys. Am I bullish long-term for Zen? Yes, I'm bullish long-term for Zen, guys. 2 to 3 years down the line. Now, again, as long as the mentors are still profitable, I don't see why they're not going to continue to essentially sell if they don't have a long-term belief in this project, guys. Long-term, long-term, I believe in Zen. I believe that this project will do well, but overall, it's not looking too good. The next support comes in roughly around the 393 area, guys, all the way to 373. Okay, now in terms of development is always great. There's always going to be new things coming into the Zen ecosystem, but sometimes that doesn't always correlate to price. You want to always protect your capital. That's what we do here at Crypto Bros. I'll leave you off with this, guys. I hope you enjoyed this video. If you did, give it a thumbs up. Until next time, as always, stay profitable.